Hey everybody, welcome to the Financial Thing live stream that usually happens on a Thursday and is happening on a Saturday. So there you go, mixing it up a little bit. Hope you guys are doing really well. Yeah, I haven't been here for a couple of weeks. I've been feeling a little off, so this is what it is, but here I am. So yeah. What date is it? It's August 9th. Can you believe it? August. Almost midway through August. Time flies when you're having a good time, right? In life, yeah. The weather here is a very balmy 30 degrees. You can see there is not much wind going on outside the Financial Thing towers. I say this is the calm before the storm. So out in the Caribbean islands, the water is very warm, and we have not yet had any major storms this summer, but I think it's just a matter of time. Global warming and all that good stuff, right? So yeah, but it's a nice day today. It's a little bit overcast, which is nice. Yeah. How's things in the UK? What's it like? What's it like in the UK? Hit the thumbs up if you can for me. Don't forget to subscribe. Yeah, I've been feeling a little bit off. About 25 years ago or 23 years ago, I got into a car accident. And not to go into too much detail, but I was driving like an idiot, chasing a friend of mine who was in a car in front. And he swerved out the way. And there was a car that he swerved out the way of that was sat in the road, not moving for whatever reason. It was an older gentleman, and I stupidly slammed right in the back of this guy and didn't have any problems for years, right? Until about 17 years later, I woke up one day and I couldn't move. I couldn't move my neck and my back. It was all locked up and pinched. And went to the doctor, and he says, probably from the car accident you had 17 years ago. And ever since then, it hasn't been great. But you know what? It is what it is. That's life. And I deal with it. So sometimes I just don't necessarily feel great. But still here to give you lots of good information, right? We're going to talk about investing because you don't care about my neck problems. What you care about is investing. You want some investing juicy tidbits and news and blah blah blah, and mailbag questions and peer-to-peer lending and stocky stuff. So yeah, that's what I'm going to give to you. So anyways, should we get into it? What time is it? 3 minutes past 7:30 in the UK right now. Yeah, let's get into it. I'm waffling. I don't know why I'm waffling. But quick hi to everybody out there. Thanks for joining. Thanks for tuning in. I know Saturday's a weird time, right? You should be out at the pub or out in the fields. I don't know what you do on a Saturday, but it's still bright outside. But yet you choose to be here, which is cool. And if you're not here live and you're watching on catch-up, welcome. And Dave Dawson, hi. Nice to see Cambridge representing Chimp O'Naughty. Paul Bagworth in Kenilworth, and Annabelle Nyron in a very sunny España. ¿Cómo está? Bien. All that good stuff. Let's get right into it. I'm just going to pull up the screen. This is not a paid plug or anything, but as we know, the Bank of England cut their rates recently. It wasn't a big cut. But I think the peer-to-peer lending rates will probably end up dropping a little bit because of that. So you could still score some pretty good rates out there. For example, gross annual interest equivalent rate for a 2-year term product now coupling 9.95%, so close to 10% for annually each year. I think that's pretty good. It's looking good. I don't think you're going to get these kind of rates and after September. Probably the 1st of September, I believe these rates are going to drop. A minimum of £500 if you want to do it. It's a pretty good rate. Let's continue on. Funding Secure, of course, our friends at Funding Secure in administration. This has been going on for, feels like 3 decades now, but probably close to 7 years. Don't quote me on that. I'm sure somebody will. But further to the update on the June 16th, 2025, the time for challenge in relation to the order granted on the 2nd of June, that is for interim distribution of monies that would be paid on loans made after April 2017, they're going to release an additional 32.5% of the funds that they were holding. So if you were a unfortunate investor in loans made after April 2019, which I don't think I was. I can't remember. Anyway, but you're going to get a payout of 32.5% of whatever they are holding. And that should have completed 4th of August, with withdrawals being processed on August 6th. So if you are a Funding Secure unfortunate investor in their loans, log into your account, see if there's any money in there. I logged into mine. I'll show it to you. That's what I do. Yeah, I've got apparently £80 and 28p that is locked up. Sorry, £86 and 11p currently frozen. I'm not really sure why. I'm sure it's something to do with probably the loans that I was in. So, I'm happy to get out of that investment in not too bad a shape. It wasn't great, but it wasn't the worst. It wasn't as bad as some of the others out there, like Lendy. But if you are an investor in their loans, go ahead and log in. See if you got any moolah sitting on the platform. LoanPad. Speaking of Bank of England interest rate cuts, they put out a really good article. It says, what do Bank of England rate cuts mean for LoanPad investors? They have been lowering their rate, the base rate, since 2025. The Bank of England has lowered their rate from 4.75 to 4.25%, with further cuts predicted before the end of the year. Personally, crazy. I think it's crazy. I think inflation is going to start to spike again. Things are still not much cheaper, if any cheaper at all. But they're going to try to pour some water on the fire, but it might actually be gasoline by cutting these rates. We'll see what happens. US expected to do the same in September. I think it's going to be a small token Jerome Powell save his job rate cut of 0.25%. We'll see. So what you want to know, though, is this question right here. How will further rate cuts impact LoanPad investors? The base rate is the interest rate at which commercial banks can borrow money from the Bank of England. If the central bank raises the base rates, it affects how much banks pay to borrow money. And they may pass this on to their customers by increasing the cost of mortgages and loans. Unlike banks, peer-to-peer lending platforms such as LoanPad do not borrow money from the Bank of England. Instead, LoanPad's funds come from its investors and investing partners directly. While the Bank of England rate cuts have an indirect impact on the broader financial ecosystem across the UK, for the peer-to-peer sector, this impact is more nuanced. Peer-to-peer lending rates can typically offer higher investment returns than traditional savings accounts because they operate outside the traditional banking system. A reduction in the BOE's base rate can traditionally drive traditional savings rates lower, making peer-to-peer loans potentially more attractive to investors seeking higher returns. However, this could result in lower peer-to-peer lending interest rates as platforms adjust their offerings to remain competitive in response to cheaper borrowing costs. At LoanPad, we are currently targeting returns of between 5.1 and 6.1% for our investors, depending on what type of account is chosen. We try to keep our rates as competitive and consistent as possible. In the past, we've changed our rates. In the past, when we have changed our rates, we have made these changes slowly and gradually so that our investors can adjust their portfolios and make any necessary changes. We will always communicate any rate changes with our investors clearly, while always ensuring that we continue to deliver the great service that we are known for. So, I think to summarize, what LoanPad is saying, because everybody loves a good summary, myself included. Who wants to read all of that? But the summary of that article is that LoanPad will keep an eye on the market rates, what the banks are offering, what other competitors are offering, and they will adjust their interest rates as needed to remain competitive. Because now if LoanPad does not remain competitive, it means that their borrowers go other places to get money, which means you, as an investor, start to see some issues. So LoanPad is always going to be doing that balancing act to provide rates that are attractive in order to provide you, as an investor, a good yield on your money. So I think the bottom line of this is TBD, to be decided. Do I think they're going to go below 5.1%? I don't know. I don't think so. Not in the short term, at least. There is this kind of emotional level of investing where you start to see rates lower than 5%. You start to really think, wow, is this worth it for the risk that I'm taking? Let's see what the savings rates are now. Give me a second while I pull it up. Easy access savings accounts. What can we get right now? What can we get? We get a 5% variable rate at Chase. Look at these rates, 4.5, 4.3. If LoanPad goes below 5%, that's really a tough sell. Now the 6.1% in the 60-day access more attractive, but you got it. They're going to have to keep it above these 5% rates unless these savings accounts, which are FCS protected, start dropping their rates. Then it becomes less of an issue. So there you go. Now the thing to know about these savings rates is that they can change any time. They're variable rates that you could open it one day and the next week the interest rate can get cut by 0.5%. You see some of these, like this Chase account has a bonus of 2.25% for 12 months. So that's locked in. But some of these other ones can really change, and sometimes they have rules that you have to jump through to get those rates. So I still think LoanPad's going to remain competitive. Let's look at the LendInvest Capital June 2025 newsletter, which shows how they're doing. Number of investments posted, 15 investments posted during the month of June. That's a lot for LendInvest. Average return offered 8%. So they're definitely shooting for higher returns. Average investment size 234,000 UK pounds. Loan to value 71%. So a productive month for LendInvest. Assets Capital, your favorite peer-to-peer lending platform, ladies and gentlemen, put out an update with not so happy campers out there reading this going, gosh, I wish I'd never invested through Assets Capital, myself included. Of course, it sucks, but again, is what it is. We are getting some money back on that voluntarily shut down of retail. We're pleased to confirm that we continue to deliver distributions from the Access accounts to investors' cash accounts, with Access account distributions now up to £83 million, including 11 million distributed during the quarter up to July 1st, 2025. I always get that backwards because in the US start with the month. So July 1st, 2025. Capital distributions will continue to be made pro rata across all Access accounts. Funds going back to investors' cash accounts. No new loan investments are coming onto the platform, of course. We know that. Look at the loan portfolio update. Since commencement of the retail loan book runoff in the 31-month period, mid-December 2022 to end of July 2025, 210 loans with a value of $108.1 million have been fully repaid, along with plot sales and other partial repayments, $10.9 million, making a total of £190 million. That's a further 16 loans and approaching £12.7 million more repaid over the past quarter. Last quarter has seen a further reduction of development loan portfolio size with just 3 live development loans remaining. Blah, blah, blah. Here we go. Total loans, 127 loans, 69 of them in default. Is that right? That's not good. 69 of the loans are marked as default with a total value of £35.7 million. Blech. Bunch of numbers here that we really read and go, ugh, it's not looking good. Let's have a look at the lender fees, because that's what we need to know. For the plan we outlined, there was a fee of 6.25%. High fee, June to September 2023. Post-December 2024, no fee expected. We are pleased to confirm this lender fee plan is unchanged. As things stand today, we have ceased charging the lender fee from January 1st. But please bear in mind, the previously charged fees that have not been able to be collected due to the borrower not making loan payments will be collected if the borrower starts making payments again. You do have a transfer out ISA fee, £35, blah, blah, blah. I don't know. How do you guys feel about assets capitalized? I've come to accept that these administrations, voluntarily or involuntarily, are just part of the risks you take with peer-to-peer lending. They suck. Nobody likes them, but I think you have to just accept that there is only so much you can do, and there's only so much you can worry about. So I just have let go and released the annoyances that I have for all these different platforms. Some definitely more than others. But acceptance, I think, is the key answer to all of our problems in life. We just accept things and do what we can and just move on. So it is what it is. But interestingly enough, too, with this email update, it did not come from Stuart Law. As some of you have emailed me and said, hey, who is this Martin Helam? Well, now he's the customer service manager. He's going to be taking the brunt of all the heat that probably Stuart Law doesn't want to take anymore. So there you go, Martin Helam, whoever you are. This is the LHX, the London House Exchange. Of course, used to be called something else, Property Partner. They continue to sell off units. As you can see here, between March and June, they've sold an additional 13. Is that right? 13 units? Or am I getting that right? Nope. They've sold 268. They were in March of 2025, sold now up to 285, with a remaining 243 total. So still a lot to sell. Still some let. This is just really another one of these situations that, the good thing about them is that they do have a secondary market. If you do need to sell, you can discount your shares and get out of there. But, it depends how big your portfolio is. I think that if I had a small portfolio, I'd probably just run with it rather than taking losses. But you have a bigger portfolio, I could see why you'd want to get out. There have been no changes to dividend distributions this quarter. Dividends for the month of July 2025 we paid on August 5th. I think they're really small dividends. Now you got these people who are poor people who are LHX mortgage holders, bond holders. I wouldn't touch that with your poll. And then talks about some voluntary liquidations. Still properties with these fire safety issues with the cladding. That's cost a lot of money. So not the greatest situation, but again, is what it is. Practice acceptance. Practice acceptance. That's all we do. You can see here the Financial Times, by the way, talking about the Bank of England. They had a very tight vote to cut that rate to 4%. 5 to 4, so 4 people did not want to cut it. And those 4 people didn't want to cut it because they are concerned about inflation. You can see this Bank of England governor who's contending with sluggish economic growth and stubborn inflation. But 4 people didn't want to cut it. 5 people did. They got their way. So BOE, which means your savings accounts are going to fall. Sure, some of those savings accounts already have. Yeah, House Martin update 2025. Look at this. We are proud to have passed £5 million in interest paid to investors, a significant milestone and one we couldn't have reached without your continued support. It's especially rewarding to be delivering these returns while also helping provide long-term housing to people with additional needs. I do love that about House Martin. I love that they have a cause and they are doing some good in the world. July brought some encouraging signs for the property market. Latest RIC survey showed that buyer demand has stabilized, moving back to positive territory for the first time in a year. Anything else? 2 new property launches. Oh, look at this. As inflation remains sticky, we've seen the benefits of 3 properties, Abingdon Way, Doris Close, and Brixton Road, received a 3.6% rent increase, directly enhancing the yield for investors in those properties. That's nice. We are pleased to launch 2 new properties in July, targeting 7.4% annually with strongly structured. So they are moving in the right direction. Good stuff over there. Oh, look at that. We already did that. I saw a couple of interesting posts on the Peer-to-Peer Independent Forum. I thought this was cool. Following a post here, I decided to have a play with Google's AI mode. I asked, this was Ace, by the way, a moderator there. I asked it to suggest a suitable peer-to-peer platform mix for a £100,000 investment. Ooh, that is rich. After giving good advice on general investing principles, recommendations to diversify, and risk warnings, here's the results. Number 1, foundation, lower risk platform, invest and fund 20%, loan pad 20%, growth potential, mid-range platform, capital stackers, and Cufflink, 20% each. Higher return, Axia Funder and Folk to Folk, each at 10%. I think that's a pretty good little AI job of, putting it out. And as Ace said here, one thing that AI did get wrong is 10,000 in Folk to Folk. Can't do that because they have a minimum of 20,000 per loan. I also think that really kind of leaves you a little bit under diversified, because how much you're actually going to be able to put in. So that would be just 10,000. That's going to give you, even if you bumped it up to 20 grand, that's one loan. That's really pretty risky. So I'm not sure I would do that, but I think the other ones are actually quite interesting suggestions. I'm not sure though that AI is actually aware of some of the other peer-to-peer platforms that exist. I've asked ChatGPT a couple of times about peer-to-peer lending, and it'll tell me about Rate Setter and Funding Circle and stuff that doesn't exist anymore on the retail space. So sometimes AI just doesn't get it right. Another interesting post, Will Smith, what a great name. Interested on what investors' take is on a hypothetical £100,000 replacement investment, perhaps as a sold buy-to-let with all the various hassles buy-to-let investors have. So he's saying if you had a buy-to-let that you sold and you had 100 grand in cash, what would you do with the 100K? He's proposing loan pad 60-day, prop lend, that's 20,000 investment, prop lend 10,000 investment, Cufflink 10,000 investment fund 10,000, House Martin 10,000, Easy Money 10,000, and then a CFS protected savings account 30 grand. That should deliver you a yield around 6.5%, depending on what happens with rate drops. Yeah, I don't mind it. I think one of the things is, do you need this? Do you need the 30,000 in the savings account? If you don't, I think you'd have to put that in some of these higher yielding ones to try to get a better yield of 6.5%. Because nowadays, we are greedy investors. We want to see more than 6.5%. And there are places that you can put money nowadays. I'm going to show you a couple of other places that not financial advice, of course, but somebody asked me a question in the mailbag about yield, some of the high yielding ETFs that you can buy in the US that give crazy yields, and how quickly you could replace, this missing money here of this 6.5%. You could get that back pretty quickly in a high yield ETF. So I'm not sure that 6.5% nowadays is really a good target. But again, I think we've gotten quite greedy as investors, especially with the markets doing so well. We look at some of these rates and we start to see 4.5%, 5.5% as being not very attractive. 7 is better. 9 is nice. 9 is nice, but again, you got to be careful with risk. You start chasing these yields, and the markets turn against you, you really get hit. But I think that's a pretty good starting point for a 100,000 investment in peer-to-peer lending. Not too, I guess it's a little bit different to the one that AI shot out, but some of the same overlaps there with LoanPad and Cufflink. So interesting. You want to see the trading 212 portfolio? Is that okay? I could show you that. Nothing much has changed. Hang on, let me go to the portfolio. Show you where we are. 29,881 pounds. So kind of a bit of a middling week. A little bit better. We ticked up. We were down at, see where we were a month ago. We had a bit of a roller coaster, down from 31,000. And then last time we spoke would have been, I think, around the same, 29,679. So we've had a drop and then come right back again. Scratching at 29,881, so a little bit under 30,000. MicroStrategy doing pretty good, still in the green, 12%. But had a bad month, 4.9% in the red. Our S&P fund is still hovering just under 8% in the green. Nvidia has had a really, really nice run. Look at this, $182. You could have bought this stock. Back in the 31st of March. So not even 4 or 5 months ago, down at $94 US. I'm glad. I really got a little nervous about Nvidia. I did take some profit, but I decided dead people make the best investors. Just sit on your hands. AI is not going anywhere. When I see news stories that Nvidia is supplying Elon Musk with half a million. Is it half a million? Half a million GPU chips for his Colossus Center. It's kind of a no-brainer that Nvidia is making money. They're going to continue to make money, in my personal opinion. So look at this. The stock's almost gone up. It has us doubled. So it's done really well for the portfolio. We're up about 80% on it, $3,000, 3,200. Amazon just ticking away, 18% in the green. And then Tesla, stinky Elon is still not doing much of anything. 5% in the red. But I think they're going to release a cheaper car soon. So we'll see. Once they do that, I bet the stock is going to take a hefty jump up. So pretty good. Hopefully we can get it over 31,000 this coming year. What else are we going to talk about? Let's go to the mailbag. Since we're talking about stocks, I will show you an interesting email that I got. Let's go. Screen share. There we go. Hi, Lawrence. I know in the USA there's some interesting high-yield ETFs, that's exchange-traded funds. Do you know that, by the way, this S&P 500 Vanguard product is considered an ETF, an exchange-traded fund? In the US, they do have a lot of access to funds that are not necessarily offered in the UK, which is a shame. So this person, Trev, is asking about some that he's read about in the US. what are my thoughts on these? Do I own any? For example, MSTY, HOOY, YMAX, BTCI, Alti. Appreciate your thoughts. Oh yes, in the UK, because we're living in an archaic society, you are restricted to things that you could buy. The government doesn't want you to own certain things. So if we punch in some of these ETFs, you can see here that Trading 212 does not offer them. Now, I don't know if there are other trading platforms in the UK that do, but HOOY is not offered. UTLY is not offered. See, PLTY, I think is another one. So that one, is that offered? Maybe. Let's see what it is. Okay, so PLTY is one of them. And I'll explain what these high yield stocks are. Another one that I know is offered is MSTY, aka Musty. Very, very high yielding stock. That you can see is having a bit of a rough 1 year. But anyway, I'll explain what these things are. So basically what these are is ETFs that are option-based ETFs. So in Wall Street, options are a big thing. People sell options, they buy options, they're speculating. People who really know what they're doing when it comes to trading, sometimes they can make money off these options. There's a lot of times it's just gambling, unless you're really an expert and you can follow along what it does. Now, these yields that are paid on these ETFs are absolutely huge. Right? You can see this one right here. This is the MSTY, and this is based on MicroStrategy, aka Strategy, and they are offering a yield, and I know it's dropped, but it used to be about 10% a month, so it was about 120% yield a year. Now it's, I think it's probably about 6% a month. Still crazy. Now the problem is with some of these high yield ETFs, they can really fall in value because the price of the ETF gets eroded when they make a big dividend payout. The price of the ETF drops, and you can see here, this ETF in January was about $30, so it's lost 19% of its value. And then also a year ago, this ETF was $44. But now at these lower prices, some of these high yield ETFs start to look really good. If you can get 6% a month, even if you can get it for a year, you hope that these prices of these ETFs will hang on long enough for you to pay for the ETF with your dividends, take those dividends, buy something else with it, like buy a Vanguard tracker, and try to get your ETFs paid for within 1 to 2 years. That's the theory. You can buy this MSTY in the Trading 212 platform. I'm not really sure why it's priced differently, because in the US this is priced about $19, and on Trading 212 it is $29. And please do your own research, because again, these are volatile instruments, but some of them are paying crazy, like HOOY, which is a Robinhood option income strategy. That, by the way, these are professional guys who are running this fund. They do charge I think about 1%. You can see the expense ratio of 1% a year. I'm generally not a fan of anything managed by a human being because they make mistakes. But when it comes to the yield on these ETFs, it could make up a small percentage of your portfolio if you wanted to take a bit of a gamble. I'm experimenting with them at the moment, so I probably won't know for 6 months to a year whether they're actually worth what they do. So I don't know what the yield is on this HOOY, but I'm expecting that probably around the same, somewhere between 6 to 10% a month. You can see the 52-week range. This one has actually gone up in value. It was low of $51, is now $78. So this one has actually appreciated in price, as well as paying out these really big dividends. You have another one called YMAX, which again is an options ETF. Basically, you have the experts doing the hard work for you if you are into selling options and buying options. Essentially, in the US, called covered calls. You can do it in the UK too. But you just have to own a certain amount of shares in order to be able to sell options. You can see here the yield on this is 63.35% a year. Again, the problem is down 22%, but does it really matter if you're getting a 63% yield if the ETF price drops 22%? Not really, because you're getting so much money back in dividends that you don't necessarily care as long as it doesn't go too low. It requires some advanced calculations. But in the UK, you are limited to these high-yielding ETFs. This MSTY is one you can look at. I don't know if they don't have the Robin Hood one. See if they have the YMAX. Probably just be easier to type in yield max, see what they offer. So they got a big tech options one on the London Stock Exchange. You do have a UK price micro strategy one here, or you can do it in US. So there's a couple of options. Yeah, if you're interested in learning more, look at the yield max products. And again, that's what these guys do. They just trade options through the ETF, and it's all regulated. It's just volatile. But if you're looking for income and dividends and you want to take a percentage of your portfolio just to get big dividends back, it's certainly a way to go. What are my thoughts? I don't know. I would say my thoughts for 95% of people out there, probably don't do it. Just stick to your index trackers. Easy. You don't want to deal with the emotional swings that these types of things can give you. If you're more of a gambler and you want to take a small percentage of your portfolio and try to add some of these ETFs that are available in the UK, or if you're in the US, you have access to all of these. Sure, why not? Just don't do it in one. You've got to diversify out. You probably need about 4 or 5. And do I own any? I do own a very small amount of a couple of these. Again, as a test, I wanted to see what they actually return. So there you go. Moving on. Hi, Lauren. Silly question, but you might find it funny. You might find itty funny. Tell me something about Bitcoin. I'm learning about it with some friends. They think it's pointless. That's all, and thanks. Cody, tell you something. That's a very vague question. So I thought, what could I tell you? I could tell you a couple of things. Donald Trump is opening U.S. retirement plans to cryptocurrency and private equity, which is going to mean a lot more money is going to funnel into Bitcoin. So that's one thing. And the price is pretty stable at the moment, 116,000 US dollars. Look at our friend Mr. Ethereum, $4,206. That's really jumped up a lot in the last 7 days. But Bitcoin remains stable. What else can I tell you? I found this really great website. It's howscarceisbitcoin.com. 21 million Bitcoins, right? How scarce is it? Current Bitcoin distribution. 70% of Bitcoin is held by individuals. That's just a little bit under 70%. That's 14.5 million Bitcoin. 7.5% has been lost forever, so 1.5 million Bitcoin's gone. 13.2% is held on exchanges like Coinbase and Binance. 4.2% is held by the Bitcoin miners, and 5.7% yet to be mined. So think about it. There's only 5.7 left that's going to be mined. Bitcoin versus the world's population. Even if you're not into Bitcoin, you're not interested in it. This is pretty cool, I think. There's approximately 8 billion people in the world. If Bitcoin was distributed equally to everybody, 21 million Bitcoin divided by 8 billion people, that would mean each person could have 0.00263 Bitcoin. Not much. Bitcoin versus millionaires. There's 60 million millionaires in the world. If every millionaire wanted a equal share of Bitcoin, that would be 0.35 Bitcoin per millionaire. So not much to go around. What about the other types of entities? Bitcoins versus governments. 21 million divided by 195 countries, 107 107,692 bitcoins per country. Kind of cool. If there was, there's 359 million companies worldwide. That would mean each company could have 0.05 Bitcoin. Not much. Not much. And then small businesses, 33 million US small businesses. If they wanted to all own a piece, they could only own 0.63 Bitcoins per business. Bitcoin versus land mass. There's 36,556 acres of land in the world. That's the entire Earth. That would be 0.00057 Bitcoin per acres. Not much. Bitcoin would be 1,742 acres equivalent. That's 2 Central Parks in the US. How about commercial real estate? 21 million Bitcoins. There's 300 billion square feet of real estate in the world. That would be 0.00007 Bitcoin per square feet. Interesting, huh? Bitcoin versus housing units. There is 2.3 billion homes in the world. That would be 0.009 Bitcoins per housing unit. And cars, if you're into cars, 1.4 billion cars on planet Earth. 21 million divided 1.4 billion, that's 0.015 Bitcoin per car. Commodities. Gold. 6.95 billion ounces of gold exist in this world. You divide that by 21 million Bitcoins, that would be 0.003 Bitcoins per ounce of gold, and 0.012 per ounce of silver. How about oils? 1.5 trillion barrels of oil, 0.0000013 Bitcoins per barrel of oil. That's just the big stuff. We didn't include computers, food, clothing. So, what is the point of this website? It's about scarcity. You know, if there's one thing that I always find fascinating about Bitcoins, there is only 21 million, and there will only ever be 21 million. And that's it. Once that 21 million is distributed, it'll be very hard to get your hands on some. It's scarce. Not like the fiat currencies that we see governments printing every single day, increasing the debt. Through the roof, debt is through the roof. This is the problem, and this is one basic fundamental that does make Bitcoin very interesting, that you cannot make more of it. Once the 21 million is gone and has been mined and distributed, that's it. That's why they call it inflation hedging. You can print as much money as the US government or the UK government wants to print. You can't print as much Bitcoin as you want. So I think if I was to tell you one thing, you asked, and tell you something. I did. I told you something. 21 million. 21 million. And you're learning about it with some friends. That's cool. Look, do your own research. So it's not for everybody. It may not be for me. I don't know. But I do think, I find some things fascinating in life, you know? Don't you? Even if you're not interested in buying into it, I find some things fascinating. I find fascinating that a guy jumped out of a hot air balloon in space and parachuted down to the earth and landed and didn't die. I have no interest in doing that, but I find it fascinating. I find it fascinating that cars are going to be autonomous and can drive themselves. Like planes, they can fly themselves. I think it's good to learn about things that you may not be interested in flying a plane, but I think it's cool to learn about it. And if your friends think it's pointless, cool. You know, nobody's here to persuade anybody of anything. We just provide information and do with that as you will, right? Like with everything, like with our peer-to-peer lending. We provide information, you invest the way that you feel is right for you, or sometimes not at all. There's people on these forums that have given up and said, I don't want to invest in peer-to-peer lending anymore. Okay, cool. we're not here to persuade anybody to do anything. It is interesting that under the general discussion in the peer-to-peer forum, there is just not much activity. You know, there's a little bit of activity, but not a lot. Not a lot. Not like there used to be. So, yeah. I think it's cool. I think everything is quite fascinating. See if there's anything else. Did I miss anything? I think that's all I got for you this week. Yeah. Let's see if you have any interesting comments. Then I'm gonna get out of here. Where is everyone? Up the pub? Yeah, hopefully on a Saturday, I would imagine. Jimbo Naughty says, I'm glad I never signed up with Assets Capital. Nearly did a few times, gut instinct stopped you. There you go. Fuming about Assets Capital, Annabelle. Fear I will lose a lot. Yeah, it's unfortunate. I think that, you know, these companies pulled the wool out over people's eyes, myself included. I mean, I went to Assets Capital a couple of times. They paint a beautiful picture. You go to into the building. It's huge. They got tons of people working there. Stuart was in his nice office, talking a big game. And everything on the surface looked good. It looked good. You can't fake that kind of stuff. But the problem is, again, we don't know what's going on behind closed doors. And I think that's the problem, is you don't know what's going on. Neither do I. I go to the office and I'm shown everything. It looks great. But at the end of the day, the wool can get pulled over investors' eyes like it did for me. Crypto ETNs coming soon for retail in the UK. FCA okayed it. Can you explain crypto ETPs? I don't know what an ETP is, to be honest, Darren. Jimbo Naughty. I can tell you what an ETF, a spot ETF, means that if you buy, for example, a Bitcoin spot ETF, it means it just tracks the price of Bitcoin. It's like an index tracker for a crypto product. And then it gets scaled down depending on how many shares are issued. You're getting a small piece of that ownership of Bitcoin. So, for example, let me show you one that is big in the US, which they probably don't have in the UK. Oh, here you go. Look, I didn't know can you buy this? No, you can't buy it. So iBit is a spot Bitcoin ETF in the US. So this tracks Bitcoin. Bitcoin goes up, the share price goes up. Bitcoin goes down, share price goes down. So this has been going since January of 2024. You can see, look at that, 165% increase gain. But that's what spot is. Now these other high yield ETFs, they are not spot ETFs. They are options trading ETFs. So a little bit different. But I don't know, to be honest, what an ETP is. Maybe that's just what the UK calls a product that in the US they call something else. But spot ETFs are a way for you to gain exposure to Bitcoin without holding your own Bitcoin. So if you wanted to buy a couple of £100 of one of these ETFs they actually do hold the physical Bitcoin too. They buy and sell it as people buy and sell these ETF shares. So it's a way to get exposure. The fees are not particularly high without having to run the risk of losing your own Bitcoin if you want to self-custody it. So it's a good way to get exposure. And these are the products that are going to be allowed in retirement, private pensions and things like that in the US soon. So we'll see what happens with the price. Exchange traded product. So yeah, ETF, exchange traded product. There's tons of different ones. I don't know, again, what's going to be released in the UK, but in the US, there's tons of them. They've got ones that are predictions of the future price. They've got options traded ones. They've got spot ones. I think for most people, the spot ones are going to be, unless you're looking for very high yield, spot ETFs are the way to go. It's tracking the price, just an index tracker for within an ETF for whatever crypto product. Any opinions on best crypto exchange in the UK? I mean, they all have their pros and cons, but I think Coinbase and Kraken are both good. But you never want to hold your, if you do own cryptocurrency, you don't want it to be on the exchanges. It should be under your own possession, because those exchanges could fold any time. Just like a peer-to-peer goes under, these exchanges, they go under, they take your products with them. Binance is big, but again, I would just use it to buy and then get it off of there into your own custody. That's why the ETFs are good, because you don't have to worry about self-custodying. You don't really technically own the Bitcoin, but it's safer. If something happens to you, you don't have somebody having to worry about how to get your access to your cryptocurrency if you own any. Anyway, that's all I got. I hope you enjoyed the stream this week. Please hit that like button if you can before you leave. It helps me out. Not much. Takes a second. Just press. I'll see you next week. I don't know what day I'm going to be here. Depends on how I'm feeling. But if you're signed up for the emails, you'll get an email notification the morning of the stream with the start time and a link to the stream. So tell your friends and family about it. Leave a comment. Thank you again for joining me. Love to everybody. Hope you have a great rest of your weekend. Enjoy the weather. Hopefully it's good to you wherever you are. And I will see you next time. Take care. Bye-bye.